If I could just figure out if today's daily candle is going to go higher or lower, I'd make money in these markets. It's exactly what I get sent all of the time. So today, let's finally teach you the easiest way to find your daily bias every single time. So there are three main things I consider when looking for daily bias, and it is our dominant price swing or our dealing range. It is fair value gaps and it is liquidity. Those are the three things I'm considering when I'm looking for my daily bias. Okay, I look to trade intraday. So if a daily candle signifies something to me, then the next day it will be an intraday trade for me. And I will get into what I mean by that in a second. Firstly, let's dive into the three factors that contribute to my daily bias. First of all is the dominant price swing or our dealing range. This is defined by a high that took out buy side liquidity and a low that took out sell side liquidity. It is also a dominant price swing. So what you see on your screen here, you can see the dominant price move right now is from here down to here. And we take this and use it as our dealing range. Okay, so I take the range high to the range low. And as you all know, 50% is equilibrium. Above that is a premium where we want to be going short. And below that is a discount where we want to be looking for longs, okay? So once this is established and we start to move up like this, you can see once we come down here, we print an indecisive candle. And let's dive into this. What does this candle actually do? Okay, so this candle creates the low and then moves off of it. Look where it closes. This candle closes inside the body of this candle, okay? So this gives us an indecisive candle where we wicked below, took out sell side liquidity, and then closed inside of this candle and this candle, okay? You can see the very next few days move up with momentum, and these are all intraday trades you could take. We then trade lower and rebalance and imbalance. Look at this candle now, okay? This candle takes the low and then closes inside of this candle. We then move up again. So what we're looking for essentially are candles that close inside the previous candle, okay? Partnered with our dealing ranges, those candles tell us whether we're moving up or down, okay? So we're in a discount and this candle has printed an indecisive one. So this has moved indecisively back inside the previous day's candle. We can then predict bullishness. I want to show you a similar thing with when we trade into equilibrium, okay? So if we zoom into this over here, you can see we trade into equilibrium and above it into a premium. We then close right below where that wick. So if you take a look at this wick here, that is a 43 pip wick and then we close down here. This indicates indecisiveness where once we've traded into equilibrium of a price swing, okay? So indecisiveness has been shown and then we start to trade lower. You can see these candles, there was probably no red news around here and then the red news hits and we start to drop and we rebalance imbalances, okay? You can see again, let's say here, once we trade into equilibrium of our price swing, you can see we take a high and then close below this candle, which indicates bearishness because we've traded into equilibrium. So now, what does price want to do? It wants to attack highs and lows and rebalance imbalances. What does it aim to do now? You can see we have the bottom of this fair value gap. Indecisive candle, the next candle trades lower, rebalances an imbalance and trades into this fair value gap here and this down close candle. And then look what we do, okay? So now we're following along and we trade into this imbalance. We reject the imbalance and close above it. What does the next daily candle do? Opens up, trades lower, given our Judas swing, trades higher and closes up here. Bullish day, okay? The next day, Friday, trades into an order block and then look what happens. We trade lower and then we give, this is like a signal to me almost. We trade below sell side liquidity and then close bullish into this candle or above this candle. Then the next day, open, low, high, close. And we continue to do so. You can see now we're in a premium. Remember, this is our dominant swing and this is our dealing range. You can see this candle prints indecisively as we trade into a premium. Now we look for a Judas swing. Okay, we get a little move here, which does take the previous day low. So you may have capitalized on that. let's say you didn't, let's say you missed that, we're still under the premise that this candle is in a premium and closed inside this candle. So now we're still looking for sells. Price opens up, trades higher, and then trades lower. Price opens up, trades higher, trades lower. Price opens up, trades higher, trades lower, and closes. Back into equilibrium of the price swing. What happens again? Okay, look where we traded into. You've still got this imbalance because we cut through candles, remember? So you've got this imbalance. Price traded lower into the imbalance, and then we wait for what? We wait for an indecisive daily candle. Look what happens here. We take a previous day low and look where we close. If we remove some drawings here, just to clear things up, remember this is around equilibrium. This candle is from here to here. Look what happens. Into a PD array, a discount array. We wick below the previous day low and then close bullishly inside of this candle into a discount array because we've came back from a premium into a discount of this swing. Remember that. That's the key. Into a discount array and we close bullishly. Look what happens the next day. Open, low, high, close. Right above this candle's high. Okay. Now that is the easiest way to get daily buys. Use a dealing range, equilibrium. If we're dancing around equilibrium, start looking for indecisive candle closes, okay? Or I should say decisive candle closes that close inside the previous candle, okay? And then look for your model to appear on a lower time frame. For example, let's dive into today's candle where we took out the low into a discount array, this discount fair value gap, partner with an order block over here, and then we take the low and close inside. So what will Monday do? We dive into Monday, you can see this is that candle's high. Remember, on the daily time frame, this is our buy side liquidity pool. That is the candle's low. Look what happens. Mark Monday midnight. Look what happens. The open, the low, and then the high and the close will be around here. Okay, this is a classic buy day, and this is exactly how you find classic buy days all of the time. Okay. Use these candle closures to confirm things. You can also do it on a weekly time frame. Okay, so let's take our dominant swing on the weekly time frame. You can see this is our dominant swing. Look what happens if I remove all of this, sorry. Look what happens on a recent week over here. You can see we're trading away. We put in a low into a bullish order block. We've put a low in, we start to trade away. Look what happens. Remember, this is our price range. We're in a discount at this point. You can see we get displacement in the form of a fair value gap. And what happens? This candle wicks into the fair value gap created with this displacement, in a discount market, because this is our high to low. In a discount market, we close inside this candle after rejecting the bullish fair value gap in a discount. And this big down close candle. The next candle, open, low, high, close, right back to equilibrium. Okay, so this is the importance of dealing ranges and your dominant swing. Use candle closures, partner with this, and you will find easy trades week in, week out, day in, day out. This is exactly what I do in my private Discord, and this is how we approach the markets on a weekly, daily, monthly basis. You will find so many intraday market maker models just using this, okay? So like that example we spoke about. On Monday, you can see we want to complete the market maker model. We've got an original consolidation, distribution, smart money reversal, low risk buy, another level of accumulation, and then reaccumulation, which runs out the buy side liquidity above this high, okay? All from candle closures and dominant price swings. So if you did take something from this video, please do drop a like and subscribe to me. If you do have any questions, be sure to reach out to me in my socials. They're in the description below. And yeah, as always, thank you for watching. I will see you in the next one.